back with the market right here in ET now, and the market hasn't made much of a move. We're absolutely flat. That's how we were for the better part of yesterday, and that's how we started today as well. The breath, though, has now cooled off, and it's now favoring declines as we speak. Pressure for Adani Enterprises, the big mover from yesterday. Bharti has fallen some more, 2.5% lower for Bharti. In fact, it's even breached that crucial level of 520 as a support. Petronet, Piramal Enterprises, MGL, these are some of the other losers in trade today. But it's all about autos, and especially two-wheelers. They're the ones which are taking the lead. But we're celebrating Mahindra Week, start of this week itself. So let's feature M&M Finance today, and we have with us Ramesh Iyer, the VC and MD, joining in the show right now. Ramesh, hi, morning. Good to have you on the show. We're nearing the end of the moratorium period, and September happens to be the big month that everyone's been watching out for. However, having said that, recovery has been faster when it comes to the rural end of the economy. What are the feelers that you're getting in terms of how, the customer trends are shaping up, and how better really is it when it comes to the rural end of the economy?
About 1,100 plus branches of ours are already open and up and working. And you rightly said June, July, and August continues to show good recovery at the back of good farm cash flow that was there, and the sentiments are pretty positive given that the monsoon is good. I think it's important to understand, normally April to June or July is not a great period for rural given the extreme climatic condition. I'm talking any time in the past. And therefore the moratorium that was given was during this period. So I would actually imagine that post-October, when the festival season comes in, the second harvest comes in, I think the cash flows must hold up, and rural will definitely show a very different color compared to what everyone thinks post-September the NPS will be.
Sure. Would you say that worst is perhaps not yet over when it comes to the NBFC sector, because analysts are expecting asset quality to remain under pressure for the next 6 months to come? What is your outlook on the NPAs, and whether or not we could see that easing, especially for rural-focused companies such as yours?
I think if we're talking of particularly just F21, let's say, up to March, yes, there is going to be a lot of hard work requiring to be done, because not every state we are still able to operate all 25 days of a month, right? There are some lockdowns on and off. The revenues for the individual operators are also not reached its best level. So I would definitely imagine that the volume pressures for even operators would be there, which would kind of start to improve post-October. Maybe in the fourth quarter of this year, one can see better normalcy happening in that market. To that extent, there is going to be this pressure on the overall collection that we would see. But if I was to look at the overall book, our understanding is there are one or two segments which may take longer, which is the heavy commercial vehicle fleet operating segment could take longer because of the load factor, the drivers not being there, etc. And the aggregator taxi segment could take little longer. But as otherwise, I think most of the product in rural, at least I can tell you, are all essential requirements in terms of transportation, whether it's people movement, goods movement. So they should start to earn, and then with the government focus on infrastructure beginning to happen, mining opening up in some states, the coal auctions will begin to happen, road projects opening up. But I would imagine even the infra cash flow will be a great support when it comes to rural. And rural shouldn't see a severe setback when it comes to the NPA growth that's been discussed.
Ramesh, Nikunj also joining in. I hope you'll appreciate the spirit of my next question. My next question is that in last 10 years, for minority shareholders, some would argue that Mahindra Financials has not really lived up to the promise. I'm talking about last 7-8 years. Was that largely because of the shape how the rural economy moved, or was that largely because of capital allocation challenges?
So I think it's important. One can decide to cut off at 7 years. We may say look at 10 years. So, I wouldn't want to get into that. But surely, yes, if you look at the overall shape of the rural economy in the last 5-6 years, we have not had a very uniform ride across the country. But if you look at just 2010 to 2014 period, right, when both the farm and the infra cash flow was doing pretty well, and then look at our returns that we gave and look at the growth that we had. I know it's extremely important from a rural market perspective that it's not just one cash flow which is good enough. right? Apart from the farm cash flow and the infra cash flow has to hold up. And which is why I keep saying if you look at the period from 2021 to 24, you will see resemblance of what we saw in 2010 to 2014 in rural market. Of course, we bet on that the monsoons would support and the farm cash flows would be good. If that was to happen, I think we will come back to return. Even within the 7 years, just take 2019 as one particular year. When the market was turning around in rural, it was a great year from monsoon perspective. Infra story was opening up again in some of the pockets. And we had a phenomenal return that particular year. We have stayed in rural for 25 years. We understand the market. We know these ups and downs will be there. And we are fortunate that most of the shareholders have stayed with us. And in this rights issue, we saw everyone participating. We are pretty hopeful that we will give them back the returns when we look at the next 3 years.
Mr. Anisha, the following that, which are the group companies where you would be looking at going capital allocation changes? And he shared examples of how Mahindra, the group company, would be looking out at cutting out exposure to loss-making businesses. At Mahindra Financials also, are you likely to follow this kind of an rejig? I mean, are you looking at, let's say, cutting down or contracting some of your lines of businesses where the ROS or the spreads are not high?
So, one is, of course, what the expectation from the group is. But even as a CEO, I personally think that's our fundamental responsibility, isn't it? When we are kind of allocating capital to various businesses, we have to be extremely sure and clear as to why are we doing that. So first, let's look at our subsidiaries. I think housing is our real bet. We believe that it's going to be a growth engine, phenomenal opportunity out in the rural market and affordable housing space. So I think we have kind of allocated adequate capital and that business is likely to grow. The insurance business does not need any capital. In fact, they generate cash because that's only a broking business. It's only the asset management under the financial services sector which would take a little longer to break even, but we have a partner there. And we have a very clear view on to say that if it doesn't go the trend that we have put in for the next 3 years, we will have to take a view. But coming to lines of business within Mahindra Finance, we are just a vehicle and tractor finance company, and within that we do all products including the pre-owned vehicle. Now there is going to be a pressure when it comes to return from the heavy commercial vehicle segment. One, of course, we are not a significant player, but also the fact that the consumers expect a very fine yield, and when you have these difficult situations, you do see some pressure on that. So we will look at commercial vehicle as a segment as to how much do we want to really grow and participate in. But for a financial services, there's one single line of item which actually tells the balance, which is the credit cost. If we manage our credit cost well, irrespective of at what rate we lend, I think giving the returns that's being expected from financial services, my personal opinion is that's not difficult, and we have demonstrated that in the past several times.
My next question is on somebody who understands the rural economy. You just mentioned that you have a deep understanding of 25 years of understanding and looking at the rural economy. It's just not Mahindra Group. Every corporate I've interacted with, they are more bullish on the rural economy than the urban economy. The bullishness in the rural economy is perhaps the highest I've heard in last couple of years. What is so unique about the rural economy which everybody is so excited about for next couple of years? I mean, what are the indications which you are picking up which convince you that next 2 or 3 years are good for that part of India?
So I think first and foremost is what we are all facing in the urban cities because of the current pandemic situation is not something which has still hit the rural market. It's still very insulated. So therefore you see a lot of activities happening out there, and I started by saying 1100 plus branches of ours are up and working. People are on the street. The dealer, we see a lot of footfalls from consumers to our branches. We see the same. So that's one. But importantly, in the rural market, the sentiments drive the growth. And what are the sentiments that the rural consumers look for? If the current monsoon is good, they start using their stored money. So it's not that they don't have money. They always store it for future. And then they see if the going forward looks pretty positive, then they start to spend. And we are seeing that very clearly. I think the second buoyancy I would think comes from they're all custodian of gold in their own ways. And the gold price has been something which has happened pretty well for them. I mean, you will see resemblance of that in the past. If you look at whenever the gold price went up, you will see the rural consumption beginning to happen. I think the third is most of the rural consumption is not aspirational. They are very need-based. So therefore, there is very little that they cannot do, right? I mean, if you look at tractors, why do they buy? It's not for any aspirational requirement. Likewise, any vehicles that they buy, they are not aspirational purchase. Maybe a very small percentage is aspirational, but most of it, or you look at the, upgradation of their house, they are all absolutely need-based. And therefore, whenever there is a need-based requirement of credit that we see, you would see that the very first opportunity that they get, they would start to spend. I think that's what is driving the entire rural economy, I would think. And then, of course, the government focus on trying to help the rural population, the migrant labor has gone there, they're trying to help them out. Put all this together, I think there is a lot of buoyancy that we see. And I'm very hopeful post the festival, that is the October downward, you'll start seeing much more action from the rural market.
So it's looking good. How would you peg it when you're saying buoyancy? Is it already perhaps at pre-COVID levels? And also, in terms of the kind of pickup, I mean, you guided for about a disbursement rate of 1,500 to 3,000 per month in FY21. Would you say that's on track?
So I think it's, this year is not going to be what we saw the pre-COVID kind of a number, because we already lost April, May, June from the volume perspective. And you can't catch up for the 3 months of loss in the balance of 9 months. And even as we speak now, I think there are constraints of availability of product. I won't say that demand is a constraint. I think availability is a constraint. So if you were to keep the availability away for a minute and just look at is the demand back to pre-COVID, I would think for some of the product the answer is yes, but not for all products. But clearly, if you were to just look at between October, March, and compare it to previous year October, March, and you will recall last year October, March was also not a great period given that BS4 to BS6 transition was happening. So therefore inventory correction was happening. The overall volumes were not pretty high. If you were to compare that from this October to March, I would think maybe they are equal, if not there is a growth. But I would kind of discount of 21 as not the year really to be making any comparison. But post that, you will see everything getting to normal, and you will see trends of that very clearly between October to March. But on an absolute volume basis, it will not match the previous year.
Good. Also, in terms of the product mix then, as you also just touched upon, for example, we have seen tractors come to the fore on the back of demand in the rural segment, at this point of time. Is this a more sustained trend, even in terms of the segments that you see driving growth for you going forward? What's the product mix looking like?
For us, the product mix, of course, the growth drivers would come from tractors, the auto products. We see small car demand is very high, and you must have heard from other OEMs are looking at rural market because they think the volumes there are holding up very well. Pre-owned vehicle, there's a lot of demand, but again, the supply constraint because the exchange programs are not happening. People are holding on to their vehicle for a little longer than required. So once the supply side starts to happen, I think the pre-owned vehicle demand will also be pretty good. So our growth drivers from a vehicle perspective is going to be clearly Mahindra Auto products, the tractor business, the pre-owned vehicle, and small cars what will drive. Definitely commercial vehicle, I would think, will be a degrowth story. We don't see that happen. But within the commercial vehicle family, the tippers are on demand because of the infra opening up, and the small construction equipment like the backhoe loaders equivalent, we do see demand from different pockets. I think clearly that's going to be the driver. But for us, we have a little added advantage in the sense of a large customer base and deeper penetration, and therefore we are able to get demand directly generated through our customers instead of waiting for them coming to the dealership. So self-generated volume will be something that we will focus on, which will help us grow a little faster. So we believe we will gain market share.
Okay, wonderful. Mr. Iyer, just before I let you go, anything on credit cost guidance for FY21?
So my understanding is, while the expectation everyone believes post-moratorium, the NPAs are likely to zoom and etc., but that's not our view. I think normally if you see the first and second quarter is where our NPA actually starts to move up, and then third and fourth quarter it starts to get corrected. And given the situation that the moratorium was there during the difficult times of rural market, we don't expect credit costs to really go up. if markets hold up, if the farm cash flow does well the way we expect, and some infra opens up, we could be actually seeing corrections as we close March.
All right, Mr. Iyer, we'll leave it there. Thanks so much for joining us this morning.
Thank you.
Okay, we'll take a quick break on that note.